Everyone, welcome to the Hurley Investments Market View commentary for Monday the 11th. And yes, I am hiding out in Denver, Colorado with the Brentons. Again, welcome Jack. He's our newest registered investment advisor. So in true Hurley Investments fashion, we're eating out, we're talking to people, we are golfing to find new clientele. Jack's mom is rubbing some weird lotion on him with the Band-Aid. You only get this out in Denver. It's hilarious. If you could see Jack's grin, it would kill you. But anyway, we have three things affecting our market this week. Someone tell me, what are they? What are the three things that will affect our market? So Maud's on the ball right out of the bat. Inflation. We have inflation numbers. I agree with that 100%. There are two other things that should affect our market and move our market one way or another this week. Micron tanking. I don't think Micron knows how to tank right now. But that's a good one, Nathan. That's kind of hilarious. What are the two other things that could or should affect our market this week? Think presidential. We have Trump visiting President Xi in China this week. Be interesting to see what those two talk about. I'll go into that here a little bit more. What about the last one? What's the last thing here locally within our government that should and very well could affect our markets this week? I'm thinking in terms of rate hikes. I'm thinking in terms of washing something. New Fed chair, there we go. May 15th, Powell is out, and Warsh should be in, which obviously would, for the most part, give us the hype of lower interest rates. So here we go. Inflation, Tuesday and Wednesday. We have the CPI and the PPI. They both should be higher, but we know that the gas prices have been higher. If we get relatively higher inflation numbers, the market should be able to look through it. In fact, it was interesting because Jack told me today, so you still think May's going to be lower? And I very sheepishly grinned at him and said, no, I'm going to change that. We'll end the markets this week higher, even though we're down. Well, I think we were. Make sure I'm telling you guys the right information. Even though our markets were down, well, those are the futures. We're up slightly today. They're down slightly in after hours. I am going to go higher this week. I actually changed my monthly beliefs to flat right now. But my expectation is we're probably going higher this week with a see-through or a look-through on inflation. If we have some kind of positive news, wish I could type, some kind of positive news from the Xi meeting. And again, it could be something as little as something that's made up, something that, you know, as we know Trump, I'm going to kind of tease him. Hey, things are looking really good. They're going to honor our previous trade agreement. They're going to put pressure on Iran to stop the blockade, to get the enriched uranium out of there. I mean, there could be a ton of different things. And obviously, if Warsh gets nominated, actually not nominated, if he gets placed into position, we have a hope for a couple of interest rate cuts. I have an interesting article I'm going to show you about this. But that's kind of running our markets right now. And a couple people talked about Micron. And I'm going to bring this up for you. Here's how we've been following the Micron run up. And let's just do a little bit of working numbers. This C, if you see a C by Micron, we already have a good to close order. But we're trying to be a little bit greedy. Difference in two strike prices on our 220s, 300s is $80. We're looking for our last traded price to be about $78. We don't want to give up the $9 we still have in time value on the January 27. That's next year, January on the 15th. We've got $80 of potential profit here. The last time these sold, it was only worth $68.65. Yes, there is a huge profit, a huge unrealized gain. But if we got out now, we'd be giving up roughly $11.35. Multiply that by 2,000. We'd be giving up about $23,000 of potential profit. We're not ready to do that. We don't see any fear of Micron coming down and trading below $300. We're not saying that it can't. But what we are saying is right now with Micron trading upwards of $795. After hours, it's up $3.16. Has earnings in June. We're willing to sit on this position for an extra $23,000. We're good to go. We have another set that we followed, a 340, 450. The difference in strike price here, it is $110. That is roughly $30 higher. It's roughly what, 60,000 on 20 contracts? 2,000 times 30. There's $60,000 there. We have no fear right now of Micron coming back to 450. We would love to add an extra $60,000 almost to these positions. And we can do it by just being patient. Difference in two strike prices, 360 to 450, $90. Last traded at 60 and 50 cents. We've got roughly $30 there, $29.50. We've got about 60 grand we'd like to add to this position. Our worry, the 510 600s. The ones we put on just last week, $90 of potential profit. 5 contracts should be $45,000. Current price is $21,600. We have sitting here roughly $23,400 of profit that Micron would have to lose 25% of its value before we were worried about losing money in this trade. We have tons of profit booked in to Micron. Right now, we just need to create tons of patience to wait for it to come. Kevin, oh my gosh, why are you not taking stuff off? Meta, great earnings, it's going down. Again, take a look at where we're at. Take a look at some of the positions that we're in. 7/10, January 27, we're still, what, 8 months away? Short call for $69. We are in a risk-free trade. Kevin, there's no way Meta's getting back up to $800. We don't know that. Meta might do it November till December. We don't know. But right now, our shorts have completely paid for our longs. The most we could do is make $7.50. I shouldn't say the most. The least we would make is $7.50. Kevin, the shorts don't pay for this one. That is true. But we already took $40 of credit off of this one. When it all comes down to it, the worst we could do is make $1.15. We're okay waiting because of our adjustments and because of how we've adjusted and placed positions and where we've booked a profit. Our 750, 850s for December, our 710, 800s for January 2027. Both of these trades are risk-free trades. We're just waiting for time. We're waiting for Meta to head the direction that they should. The question is, with Micron running up so fast, are you worried that it should come down and should we just take profits? We could be. You never go broke from taking a profit. But I will look a lot better, especially in the positions I showed you, if we can book another $130,000 of cash by being patient. Why is Micron different? Micron, we already know what the earnings are going to be. It has its earnings booked out for the next year and a half, roughly, where they're going to sell every single chip they make. Their constraints are materials. They're like Boeing. Boeing has a 9-year backlog. Micron has a year and a half. NVIDIA has over a 3-year backlog right now. We're not necessarily worried because, yes, it's been up rapidly, but every chip that they can make, every bunch of material that they could buy is already sold out for a year and a half. So that is why we're not so worried right now. That does not mean that if we have a horrible earnings, we won't take profits immediately, but we don't need to today. Today, there's a lot of profit still built into it that we can sit back and be patient and wait for. Briefing, taking a look at the briefing. I like this guy, but he's making me worried this year. It's now all your fault that our market went down and that it's back up. Apparently, consumer spending remains the economy's backbone. Even though real wage growth threatens discretionary spending, earnings growth, and broader economic momentum, your willingness to spend money is now the economy's backbone. has nothing to do with AI, has nothing to do with job growth, has nothing to do with Meta or Micron, chips, tariffs, wars. It's all you guys. The whole market and how well or how bad it depends or goes is dependent upon you guys and how much you spend. Now, there is a little resistance, a resilient labor market sustaining spending, but the low hiring environment leaves little margin for error. And he's correct. It's rather a unique job market where any job that's worth anything seems to be picked up relatively quickly. Our market confidence is resting that the job market will remain strong through the year so that people have money to spend. That's really what it comes down to. If not, because our housing market seems really weak, if not, Warsh is going to come in and he's going to give us 50 basis points or 2 quarter-point rate cuts, and we're going to have more money in our pocket because we won't pay as much as we normally would in interest. And it's going to seem like a house purchase is a great opportunity with lower rates. Someone just made the comment that they bet retail sales will be weak this week. I'm not sure. I actually think summer spending as kids are getting out of school. I looked at what my wife did for end of the year parties, summer for swimsuits. I don't know. I could actually see retail sales being higher than X auto when it's usually the reverse, because people are spending for summer right now. And it's funny because this person just said with gas at 450, it's hard to believe. I would agree with you, but ask any man, and I'm going to be 100% sexist in this comment, ask any man how much money we spend, or excuse me, how much money we save because it's on a great sale. My daughters have caught on to that. And when I found what they have saved me by spending hundreds of dollars for their swimsuits and their cute little summer outfits, I don't know. The honest truth is I don't know. Normally this time of year we go into the summer sales, and it can boost retail sales. All right, Dow Jones still bullish, definitely building a base the last 3 or 4 weeks. It's much easier to see right now. We will probably have a hard time getting above, got to put my reading glasses on, getting above the 50,000 mark. As I looked at it and I thought about it for saying March will probably be pretty flat or down a little bit, we need a catalyst. And a catalyst would go down and testing that 50-day simple moving average at 47,890. That's how I came up with a drop of 2.5%. Looking at the S&P, we're bullish, we're overbought. I would think, since the S&P does not stay overbought long, we will probably come down and test that $7,200 range, maybe the 7,150. We built a base there through April. That's where I would think we would come back down. If you do 2.5% off of the 7,100 level, it brings us down to the 50-day at 68.73. That's how I was calculating a potential drop for May. NASDAQ looks just the same as the S&P 500. We're overbought, and indexes do not stay overbought for extended periods of time. Same thing, I could expect to see the NASDAQ fall down to 25,000 on nothing more than profit taking. time to take a profit. Look how big money, look at the Williams percent R. Look how big money has been way overbought for going on about 6 weeks. As Jack questioned me, I chickened out. I do not think May is going to be down negative 2.5, probably going to be down negative 1, but I'm chickening out and I'm saying it's flat right now. A end to the war could boost us before we see profit taking. I would expect profit taking to happen not at the end of the month, but sometime before Labor Day. That means if we can end the war this week or before the 22nd of next week, which is Labor Day weekend on May 25th, we might see the churning in those funds. We might see those turn into profit taking for the funds as new money comes in to get back in with the end of the war hoopla. The end of the war, hey, the all clear sign is ready to go. We can now start investing again. It's kind of where the dumb money, the retail money, jumps in and institutional traders take their profits, which might be a point in time where I might look at Micron a little bit harder and say, hey, maybe taking a profit's not a bad thing to do. When we're looking at how we're trading, we are rolling out of the money puts up closer to at the money. We also are adding covered calls to positions for summer doldrums. We're adding them at the money to get the biggest bang for the buck. There are a couple positions we're willing to get taken away from us. NVIDIA might be one, Google is one, Disney is one. So we're trying to get a big credit. If you look at Google's chart, last time it was overbought like this, it'll fall back 10%. We might get to take those short calls off for a break even. We did take the 330 leap long calls. We've already taken a profit on the 400 short calls. We took a huge profit today and took those 330s off. We may end up looking to put, I don't know, 360, 450s on if it falls down to 360. If it doesn't fall down that far, we might be adding 390s and running it up to 450. We're looking at the opportunities, but we did take the 330 leap long calls off for a huge profit. The article I wanted to show you guys, I mentioned it last week. The Federal Reserve is quickly running out of reasons to cut interest rates. It'll be interesting to see how our new Fed chair justifies a rate cut or two, which I would expect from him coming the end of this year. You would also remember he was talking about how he's looking at inflation and real inflation through different metrics than most of our Fed chairs have looked in the past. So it will be interesting to see if his new metric justifies his explanation on why he's cutting rates more than expected. Replacing Warren Buffett, 4 things Great Abel got right in his first 10 minutes. He is not Warren Buffett. In fact, to be honest with you, I was not impressed with Berkshire Hathaway's annual shareholder meeting. It was Abel's first. It's interesting because it's like when you came from the owner of Apple and all those hard years, someone with passion, and then all of a sudden you got Cook as your CEO, and you're like, oh, there's such a difference here. There's such a difference from the owner and Steve Jobs, how he was passionate about everything that came out, and Cook was just a process guy. When you look at Abel, he's just a process guy. He doesn't have, you're going to read it as you read the article, but he doesn't have the experience where you sometimes came to listen, not caring about what Berkshire Hathaway was doing, but to glean the years of experience from Buffett, the corny, stupid jokes about Coke and McDonald's, the hints he would give you on what he was looking at purchasing next. You're not going to get that with Abel. In fact, if anything, you will see less attendance and less volume for Berkshire Hathaway because the excitement is gone. You just won't get it anymore like you used to with Warren Buffett. Hey, Michael Murray has another prediction because the last 2 or 3 have been wrong, but he was right, 99 through 2000 for that bubble. But oh my gosh, big prediction. Market's going to tank by half. When it comes down to it and understanding what he's trying to say, mathematically, if for the last 10 years, 80% of your gains has come from the Mag 7, Mag 11, Mag 13, Mag 17, Mag 19, 21, however magnificent stocks you feel are pushing the market higher, if you do take that profit out or half it by half, jump into the profits that were already there, we have somewhere between a 40 to a 50% drop in our stock market. That is mathematically speaking. Mathematically, there's a chance I'm going to become a billionaire as I win Powerball next week. And there's a good mathematical chance. It's only like 1 in 100 billion, right? But there is a mathematical chance. Because there's a mathematical chance, it does not mean it's going to happen. And someday these guys that are always predicting the doom and gloom are going to understand that. And last but not least, NVIDIA embraces the role of an AI investor, pushing past 40 billion in equity bets. Talk about covering your basis. NVIDIA, instead of cash hoarding like Apple, it's creating revenue streams across the board. And its revenue streams are going to be amazing. I do have a comment on Buffett that he did say at the annual meeting that the investing environment is not ideal. Obviously, historically speaking, we are at a PE evaluation that is higher than expected, but that doesn't mean that things can't keep running. What it does mean is if you're not investing like we are, adding protection is needed. You're going to run the risk of a big downside drop in the market. There's always a risk of a big downside drop in the market. There's always a news event that can occur. Your choice is, hey, do you want to invest with someone that will protect you in the downside? Or do you believe a 60-40 bond fund mixture mutual fund is what you need? Obviously, if you're here, we've chosen better than that. And I found a really interesting article. Again, it's mathematically correct. Wall Street has found a new quantum computing play that analysts see as much as a 75% upside from where our market was on April 14th. This article is old. It took me forever, forever. It's taken me 4 weeks to calculate to see if it's correct. Yes, mathematically speaking, we could see a 75% upside in our stock market. We could see a 75% upside due to NVIDIA. Mathematically speaking, believe it or not, sometime in the future, we will probably be 75% higher than we are today. What's missing out of this is the when. If you tell me in the next 20 years, the S&P will be 75% higher than our current positioning of 7,412. So you're going to tell me, hey, in the future, it's going to be upwards to like 12,500. Probably. Back in the day, I mean, can anyone believe that the Dow is now at almost 50,000? Well, 30 years ago, I'm sure someone said, hey, there's a 500% upside in the Dow. And eventually it's going to come. So just because it's mathematically possible doesn't mean it's going to happen in a timely manner. With that said, questions. What questions do you guys have that I can try to answer for you in the next 5 minutes? Or do you just want to say good night, go eat dinner? You kind of like the return, so we're good. What would you guys like? Any questions you guys have that I can answer for you? Nathan, you usually have something. Let me go through and see if I missed anything. Maud, I think I got yours. Ooh. So Mary made the comment, why are you changing your expectations? And the reality is every day I probably spend hours going through news, running gas price numbers, running supply and demand on natural gas, on gasoline, what comes in, what comes out for light crude. I work numbers on PEs to see what's realistic and what's not. Every day I'm taking in new information. So at any given time, literally, I may choose to adjust our thinking. We did at the beginning of the year work our valuation numbers. And our valuation numbers on a lot of what we have look very attainable. Don't forget, we typically get that end of the year kick, anywhere between 3 to 7% rise as people are playing catch up. I would expect to see the opportunity for a lot of our numbers to hit their target prices by the end of the year. That means in May, it might not look so good, Mary. It might be like, ooh, Meta's really lagging behind. On the flip side, ooh, Micron is just past its number. So we're always taking information in, so we do our best to justify, and eventually there are things that get overpriced and we're just going to take a profit. Thanks. I'd love to go eat dinner. Do you revisit valuation projection spreadsheet each quarter? I usually don't. I usually only go over it in the middle of the year, June, July, but I'm doing it a little bit early this year because of our war with Iran. But no, I've done the homework on those, that those are end of the year projections. So in reality, it's usually June, July, I look at it for the first time. And then I start looking at it October, November, December, and seeing how close it is that we're going to hit those numbers. So no, it's not something I revisit quarterly, monthly. It's more a big event like a war will make me look at it to see if I need to reevaluate. Or at the end of the year, I'm going to see what kind of run we can get into the end of the year. Great question. Any other questions? All right, guys. Hey, have a wonderful evening. Pleasure being with you tonight. If you do have any questions, give me a call. Maud, thank you for being able to get through your issue today with that dang secondary verification. Unfortunately, there are a couple of you that have had to fight that, so appreciate you working with me on that to getting that done and having them help you. I hope you feel that Money Block will always answer the phone and try to get to helping you as quickly as possible. Ooh, well then, Maud, let's work on it together tomorrow if we need to. Guys, have a wonderful evening. Look forward to seeing you next week. Although next week I'm probably running off to Houston. So most likely you'll see Brian next week. You guys take care. Have a good night, and I'll see you next week or the week after. Take care, everyone. Bye. Beautiful.